Welcome students. So now we are in the process of learning about the market and demand analysis, and after having talked about the basic aspects of the market and demand analysis, we will now learn about the different methods of the demand forecasting, because it's a very important component of the market and demand analysis, because ultimately we have to go for the demand forecasting, and on the basis of the forecasted demand we will have to take the things forward, or the maybe the project process forward. So if there is a sufficient demand forecasted by the data, or maybe by the process which we are involving or maybe employing for demand forecasting, only then we will take the positive steps, otherwise we will not take, because ultimately there has to be a demand for the product or the service which we are going to manufacture, or the service which we are going to generate. So what is the current demand, what was the demand in the past, and what is going to be the demand in the future? Because we are going to come up with the new venture today, new project today, or maybe in the time to come, maybe in a short while from say the present moment, next 1-2 months, or maybe 3 months or 6 months. So after that, when the production will start from that project, what would be the demand in the market? That's our important issue, and we need to have the rightful estimates of the forecasted demand, that how much demand is going to be there in the market. And that's not only for one period or the 1 year or something. Maybe we have to forecast the demand for the next 5 years, or maybe next 10 years. We have to go for the growth rate of the demand. We have to maybe assess that, maybe not in the current market, or maybe in the new markets if we want to enter, how the demand would be assessed and everything. So all aspects will be taken into account, and where could be the maximum reach of this venture. Maybe geographically you call it as, or maybe on other basis of the segmentation of the market you call it as. We will have to assess that in the different segments of the market, geographically, demographically, or maybe on the other basis, what is going to be the demand available, and how we have to maybe serve that demand, how many existing players are there in the market, how much maybe the respective market share they have, and if the new venture is going to come up, how much demand it can fulfill in the market. So all these things are to be taken into account, and there comes the issue of the demand forecasting. So when you talk about the methods of the demand forecasting, there are multiple methods of the demand forecasting, which we divide into 3 broad categories here. First one are the qualitative methods, right? These are the qualitative methods, and by employing the qualitative methods, we will have to convert them into the quantitative estimates, because we are going to have the quantitative value of the number of units, or maybe number of hours, or maybe number of whatever it is you call it as, the users or anything, depending upon the nature of the outcome of that project. So it may be a product, so it can be number of units, it can be number of unit hours, or maybe anything if it is a service going to be generated. So users are important for us, numbers are important for us. So we have to use the qualitative method, we have to use the qualitative data, and finally we have to convert that data into the quantitative estimates in terms of the number of units or hours or any other unit for forecasting the demand. So we have this first category of the methods, they are the qualitative methods. Then we have this time series methods of the projections, right? Trend projections, we want to know that how the things will move or go ahead in the time to come. So time series is a very important component. And third one is the causal method. So causal method also is going to play a very important role, and that's also going to help us in the demand forecasting. When you talk about the qualitative methods, we have the 2 methods here. First one is the jury or the executive method, second one is the Delphi methods. And when you talk about the time series method here, so you have the trend projection method, you have the exponential smoothing method, and then you have the moving average method. And then under this third category, causal methods, you have the 5 different methods which begin with the chain ratio method. Then we have the consumption level method, end use method, lead indicator method, and then is the econometric method. So these different methods are available. We can use sometime all of these methods or some of these methods, because ultimate purpose is forecasting the appropriate demand. And by using the statistical methods, using the qualitative or the quantitative data, if we are able to arrive at certain level, then that would be really very helpful, very useful, and we will have to maybe make some estimates which are going to be correct in the time to come, and we are going to bank upon those estimates and going to manufacture the product or generate the service as per that forecasted demand. So, in the qualitative method, for example, if you go ahead, if you see what we do, as it is written here, for example, these methods rely essentially on the judgment of the experts to translate the qualitative information into the quantitative estimates. So, we are not going to maybe collect any quantitative data or maybe any kind of the say any quantitative technique we are going to use it. We are going to say maybe the collect the opinion of the experts. There can be different methods of collecting the opinion of the experts. Experts means people who know the market, who understand the market in which or the area in which we are going to venture into. Right. If it's a particular product or so in that product, there are the experts, they know what that market is, what that area is, what that product is, and what could be the different requirements of that product or kind of the product. If you want to come out with the new variant or a new product in the market, or maybe say maybe the improved version of the existing product in the market. So, we have the different experts who have a complete knowledge of that product area, that product market or the range of the product market, and finally we can take their help, we can take their opinion. On the basis of their help and opinion, we can draw some relevant say estimates, and their qualitative information, whatever they give it to us, kind of the advice, kind of the opinion they give it to us, that we can convert into the quantitative numbers. So, when you talk about this, we have the two methods, jury of executives method and Delphi method. One is completely oral, we will discuss in the next slides. One is completely oral, whereas the second one is based upon the written information collected with the help of emails online. We do not know those experts, we do not go to those experts. We know those experts, but maybe we have not met them personally or something like that. So, we can send an email to them, and through email we can collect the data from them, their opinion, and we can follow a process which has been defined under the Delphi method. So, this is the first method, the qualitative methods. Under the time series methods, as the name indicates, right, on the basis of the previous data largely. Under the time series estimates, you need to have the existing performance of the product in the market, maybe for the past quite a good number of years. Data should be available in the time series, right. So, on the basis of that, how the product is performing in the market for the past 5 years, past 10 years, past 15 years. Depending upon the availability of the data, depending upon our capabilities of handling the longer say durations of the data, we have to use the time series methods, and there we can go for the trend projections, there we can go for the exponential smoothing methods, and then we can go for the moving average method. These methods we will discuss in detail in the subsequent slides or subsequent discussion. And then we have some causal methods. Something means one thing causes the say requirement for the other thing, right. Something causal means that one thing is already there, and if that has to be successfully utilized by the people, it requires the use of the other thing also. So, causal methods are also there which can help us. So, we have both kind of the methods, qualitative methods also, we have the quantitative methods also, and ultimate purpose of all these methods is the right amount of the demand forecasting, correct amount of the demand forecasting, and if the forecasted demand is correct, we are able to understand how the market is going to behave in the time to come, maybe with regard to a product or a service, the market which we are targeting, right, how it is going to behave. So, we can understand, if we are knowing the 100% market, we can understand that what is the respective share of the existing players in the market and how much share we can have if we are going to give something different, something improved, something better, maybe in terms of quality, in terms of the price, in terms of distribution, in terms of the after sales service, then certainly we can have the sizable amount of the market share, and that would be our forecasted demand. So, forecasting the total demand of the market and our respective expected share from the market is going to be another important consideration. So, demand forecasting as a whole, when you talk about is a very, very important component, and entire success or failure of your venture, your project, depends upon the forecasted demand. So, right from the beginning, I'm telling you, we are discussing, we are trying to understand that market and demand analysis is the most important analysis in the entire project management process, entire project selection process, right. Because ultimately you are going to manufacture something, you are going to generate some service, and there we need the market, there we need the demand. So, if the market is there, if the demand is there, and we are going to fulfill the demand of that market, the people, the consumers in the market, it means we are going to be a successful venture. But if we are going to manufacture anything but there is no demand, or if demand estimated is going to be not maybe a realistic estimate of what we expected to happen in the future with regard to that demand or that requirement of that product or service in the market. So entire investment may go down in the drain, and it will be very difficult for that entrepreneur to sustain or survive if this kind of the situation happens. So we should not be in hurry. We should always spend sufficient time. We should collect sufficient data. We should take the help of the consultants in the market. We should take the help of the experts in the market. We should try to go to as many as people possible to assess the market and demand for the product or the service which is going to be the outcome of the proposed venture. If that is going to be there, largely half of the success is already attained. But if our demand forecasting is inaccurate, inappropriate, incorrect, and what we thought we will be manufacturing and selling in the market, if that does not take place, that does not happen as per the expected, say the trend or the behavior, in that case anything can happen and entire investment may go down in the drain. We have seen that number of startups come up maybe on the year-on-year basis, but very few are there which survive. And in many cases, the existing startups, they also fail when they take wrong decisions. They are not able to assess the demand for the expansion, diversification and growth. When they are not able to assess the demand appropriately, then these startups, these ventures, though being very successful initially, they fail, they close down. We have seen the example of Byju's. We have seen the example of many other such say the ventures which have failed because of the one or the other wrong decision, and that may be a very, very fatal or maybe a devastating situation. So spend time on forecasting the demand. If that is correct, half of the things are done, because I told you earlier also that in today's competitive scenario, right, or a facilitated scenario, today's global scenario, manufacturing of any product is not a difficult thing. Generating of any service is not a difficult thing, because you have easily available investment these days, you have easily available technology these days, you have easily available say human resources these days, but it's only one thing which is not easily available, that is the market. So you have to assess the market carefully, you have to assess the demand carefully, and then only take the final call, the next decision or the further decision of making investment or going ahead with the venture. So now one by one we will discuss all these methods, right from beginning with the qualitative methods. And in the qualitative methods, as we saw here, that we have say two broad methods. First one is a jury of executive opinion method, and second one would be the Delphi method. So in this method, first we will understand what is the jury of the executive opinion method, how we use this method in assessing the demand or forecasting the demand for a product or a service which we are going to generate or we are going to come up with in the near future in the form of a new venture or a new project. So as it is written here very carefully, or maybe very after thoughtful understanding, it has been written in 2 lines, that what this method is. This method involves soliciting the opinion of a group of managers, or you call it as the group of experts also. Managers, because they are already into that kind of business, so you call them experts also. You can replace this word of managers with experts also. So it means soliciting the opinion of a group of the experts or the managers on expected future sales and combining them into a sales estimate, right? Combining them into those estimates which are opined by, which are given by the experts who are already in the market. When we use them, we analyze them, we combine them, and finally we try to arrive at the sales estimated on the basis of the opinion or estimates of those experts, those managers in the market. So that is called as a jury of the executive opinion, expert opinion. And because those people are already in the market, they understand the market, they have seen the market for the past so many years, how the market behaves, how the market grows, how the market reacts to certain changes in the attributes of the product or services. So those opinions would be very, very helpful to us. So these opinions are sought maybe not with the help of any questionnaire or any schedule of questions, but largely it is oral discussions with them, oral interviews of those experts, and whatever their opinion is, whatever their estimates are, that is combined together, and after applying certain analysis methods, we can arrive at an estimate which will be helping us to forecast the demand for a product or a service. So it means this is a very, very important way of doing the things, because when you are asking something from an expert and he is going to give you certain things that the market is going to behave in the time to come. So the new ventures, new companies, new products have to have this kind of the attributes, this kind of the features in their products, so that they can become successful or acceptable to the people, because those people have been working in the market in the past. They have produced those kind of the products or generated those kind of the services, and they have been into that kind of the business. So they knows the pros and cons, they knows the ups and downs which the new ventures are going to face. New say market behavior is going to affect the existing ventures or the new ventures. So their opinion is very, very important. But one point of caution here is that don't only depend upon the solely on the jury of executives method or experts method or manager's opinion. You have to use multiple methods as far as the forecasting of the demand is concerned. But it can be one method, it can be beginning of the market and demand analysis, and especially the demand forecasting. And you cannot simply ignore the expert's opinion, executive's opinion, that they don't know anything about the market. They know each and everything about the market, and their opinion carries a weight. So we must take it seriously, we must value it, and begin our sales forecasting, demand forecasting estimates with the help of the, say, the opinion of the jury, opinion of the experts, opinion of the managers, and supplement this information with the other quantitative or maybe the qualitative information. So while using this method, we have to be very careful also. So there are some positives and there are some negatives of this method. When we go for the positives, so it means it gives us a very quick results, because talking to some people is not very, very time consuming, but it depends upon how correct your estimates of demand forecasting are going to be, that how many people you talk to. If you talk to very less number of people, 2, 3, 4 people, then it's not going to serve the purpose. You have to have the sizable number of the experts. You have to go to them, talk to them, and you have to discuss your problem with them and seek their opinion. So number of the executives, if it is large, and their opinion if you take and then you combine together to forecast the sales, it's going to make a difference, and it's going to give you a valuable estimates. It permits a wide range of the factors to be considered, right? It means when you talk to somebody verbally, orally, and you discuss the points with them, so many times they come out with many issues that certain things are already in your mind, certain things are not in your mind. So they will appraise you with those things which are not foreseen by us as an entrepreneur in advance. So they will help us to understand and to look forward toward those particular areas also, which we thought initially that they are not important. So a wide range of the factors can be considered, can be taken care of. And it appeals the managers, right? It appeals to the managers because maybe people who are going to manage the new venture, to them also, and to the respondents who are the experts also. Because many times they don't want to give you any kind of maybe reply to the emails, they don't have the time, maybe the availability of their schedule is so busy, so they are not available for responding those kind of things. But if you want to discuss something with them orally for the 10, 15, 20 minutes, 30 minutes, I think they can be available, so they can easily give their opinion. You as a promoter, you can note down those, say, their opinions and convert them into quantitative numbers and then use them for forecasting the demand for the future. There are some negatives, we have to be very careful. Some people may be biased also, right? So they don't want to give you the correct estimates. Maybe they are already working in that market. They don't want a new entrant to enter into that market, so they can be biased. They can give you very low estimates, or sometimes they can give you very high estimates because of the reasons of the biasness. So you have to be very careful, because when you talk to somebody orally, verbally, try to gain something, some information, human factor makes a difference, that plays the role. So human factor has to be taken very seriously, and human factor causes the biases, right? And important another component is its reliability is questionable, because somebody is only speaking to you. He is not sometimes substantiating his reply with the data. He is only giving his opinion. How serious he or she is, how careful he or she is to advise somebody, we have to be very careful. So, it is only a beginning, it is not the ultimate end. It is a beginning of a demand forecasting process, and jury of experts can help us to form our opinion, but we have to test this estimates with other methods also, especially with the quantitative estimates, and finally we have to arrive at a decision on the basis of the information provided by the number of methods. Then we have the next method is that you call it as the part of the qualitative estimates, and that is a Delphi method. Under the Delphi method, what is done? This method is used for eliciting the opinion of the experts, right? This is the opinion of the experts with the help of a mail survey, which is a written information. We send email to the experts. We have some questionnaire with us, we have some schedule of the questions with us. We can share that schedule of questions with them. We can email that questionnaire or schedule of questions to them. It should not be a very long questionnaire because they do not have the time to respond to those longer questionnaires. So, it can be a schedule of the questions, but it will be in the written form. And these days, earlier it was in the through the postal letters. We were sending the letters through post, and then we were waiting for the reply, then we were collecting the replies, and then we were making analysis. These days we live in the era of emails, so we will prepare a schedule of questions, we will send it to the experts, we will gather their opinion, and we will conduct a mail survey, and that is the Delphi method. So, how this survey is done? So, there are 3 steps involved in this survey. First is a group of experts is sent a questionnaire by email and asked to express their views, right? A group of experts is sent a questionnaire by email and asked to express their views. So, first of all, when we send a questionnaire to an expert, always be careful that he has agreed to participate in that survey or to respond to your questionnaire. Or if you want to go ahead without discussing or maybe pre-consulting anybody, then you have to send this questionnaire to many, maybe a large number of the experts, and even 10% of that response back, that may be sufficient for us to arrive at a conclusion to forecast the demand. So, it has to be either way. Either you first consult the expert, then you send the email so that he takes it seriously and responds back. If it is not possible, then you identify large number of the people who are known as expert in that area, send the emails to them, wait for, and even 10-20% if respond to the email or to the questionnaire, that would be really a big estimate for us and very big help it is going to maybe to us to forecast the demand. After mailing the questionnaire, right, the responses are received back, maybe from all, if it is pre-consulted 100% or maybe 10, 20 or 30%. So, the second step is the responses received from the experts. The responses received from the experts are summarized without disclosing the identity of the experts. This is a very important component. Without disclosing the identity of the experts and sent back to the experts along with the questions or the questionnaires meant to probe further the reasons for extreme views expressed in the first round. Because sometimes when we see some people give the very extreme opinions about, for example, you have a questionnaire on the 5-point Likert scale or 7-point Likert scale. It is a closed-ended questionnaire. Largely these days we send the closed-ended questionnaires when we seek an information of anybody, because people do not have the time to respond to the open-ended questionnaires. There they have to write, where they have to write maybe themselves. So, it is a closed-ended questionnaire. And if it is a 5-point Likert scale or a 7-point Likert scale, so you may expect that normally some people should respond in between. You have this very good, neutral, or maybe say agree and strongly agree, something like that kind of the responses can be. So, if you are expecting, then most of the people will be somewhere in between. That from 1 to 5 responses are there. So, somebody would respond 3, somebody would respond 4, somebody would respond 2. But if somebody ticks on the 1 or somebody ticks on the 5, so these are the 2 extremes for us. So, if some questionnaire, some responses or some questions are, or maybe sometime large number of questions are responded maybe towards the left side extreme or the right side extreme, 1 or 5 or 1 or 7. So, those questions need to be further explored. So, first we will send the questionnaire to them, we will receive the responses, we will look at the responses, we will see how many extreme answers are there, and then we will send back, without disclosing the identity of the experts, we will send back the questionnaire to the experts and again seek their opinion about the extremes. Maybe we can ask them that some people have ticked one, maybe out of the 20 people, 15 have ticked one for this question, and some people have ticked maybe 5 for the next question, or some number of questions. So we can seek their opinion further. What is the reason of these extremes? We were expecting the reply somewhere in between 2, 3, 4, right? But the reply is somewhere 1 to 5 or 1 to 7 or 1 and 7, 1 and 5. So these are extremes. So you want to know about that also. So finally, the process may be continued for one or the more rounds. The process may be, if we are able to get the reply for those extreme opinions after the second round, then we will stop there only and we will arrive at our own demand forecasted estimates. But still some extreme opinions are left. So we will continue the process of sending and resending the questionnaire back to the experts without disclosing their identity to anyone, and we will keep on doing it until and unless a reasonable agreement is emerged in the view of the experts. A reasonable agreement is emerged in the views of the experts, because extremes are not always going to happen. Sometimes some extremes may be there. We have to find out the reasons for those extremes, and we have to maybe try to know how many extremes are there and what can be possible of misgiving such an extreme response or extreme reply by the expert, because we have to see them that normally it should be in the expected range of the responses, but some responses beyond that, totally beyond the expected range, or totally as an unexpected response. So we'll have to check for that, we'll have to take care of that, and we'll keep on doing this process until and unless we arrive at an estimate which is reasonable, which is sensible, which can help us to forecast the demand, assess the demand for our product, and there in the form of the written survey conducted through email, that's called as the Delphi method, we can assess the demand, forecast the demand, and finally we can arrive on an estimate. After that, we have to have now these some quantitative estimates also, but here are some, call it as the goods or bads, or the positives or negatives of this Delphi method. First one, it is intelligible to the users. When you send something in writing, something maybe in the form of a questionnaire, so it's easy to understand, right? People understand it easily, what question you want to ask, what you want to know, and they respond it in a better possible manner, sometimes which may not be possible even talking orally to somebody, that may be expressed in writing, and that would be very easy to understand to the expert also. And sometimes when they respond in writing, that would be very easy to understand for the people who are conducting that survey or collecting the information. So first is the intelligible, and second thing is it seems to be more accurate and less expensive, because you are using an email. Right, you are not using pen, paper or anything, no printing, no paper, nothing is required. So it's less expensive than the traditional face to face, because if you want to go for the face to face discussion, you have to reach out to that person. So you have to spend money on traveling, you have to spend time, you have to take his time, you have to spend time with him. So it's less expensive, more easy and less expensive. It's going face to face is more expensive, but through email and collecting information like this is less expensive and it's better. So these are the two positive things. And there can be some question marks also, which can be considered as a negative part of the Delphi method. So first thing is that, for example, the question marks, what is the value of the expert opinion? This is one important thing. This is a very important question. Second important question could be, what is the contribution of additional rounds and the feedback to the accuracy? If, for example, people stick to their replies that in my opinion it is 5 or it is 1. So, or maybe when we insist upon, they may change their opinion, but actually the opinion is going to be either 5 or 1. So, there can be some issues that what the opinion experts give, whether it's oral in the form of the jury method or in the form of a Delphi method, maybe in the form of a written response. Number one. This is the first important thing. Second thing is, when you ask same thing again and again and they change their replies, what is the value of those changes and what is the value of the expert opinion? That's a very, very important issue for us. So as I told you, it's a point of caution for us that qualitative method can be just a beginning of the demand forecasting, just a beginning of the demand forecasting. But if you think that it's going to serve the purpose for the whole demand forecasting, no, it's not like that. So you can use it as a one part, but you have to supplement the qualitative method with the quantitative methods. You have to take the past data, real data. On the basis of that, you have to forecast the demand in the future, and for that purpose, you have to go for the quantitative estimates. And when you go for the quantitative estimates, as I told you, we have the three methods of the quantitative estimates. And when you talk about these three methods, they are something like, you call it as trend projection method, exponential smoothing method, and moving average method. So we are going to discuss these methods. They are better, they are important, and they are better as compared to the qualitative methods. So first we can start with the qualitative methods, and then we can supplement that qualitative methods information with the quantitative methods information. And the first method is the trend projection method. So when you talk about the trend projection method, as the name indicates, trend means what? Trend means the behavior or the amount of the sales of any product or a service in the previous number of years. That can be previous 5 years, that can be previous 10 years, that can be previous 15 years, depending upon the data which we have. So if you plot it on a paper in the form of a graph, what trend it depicts to us, whether it's depicting a rising trend, or it's a downward trend, or it's going to give us a straight line, the trend is stable or straight line, what it is. So we have to go for that. So trend projection method is a very, very important method. And when you use the trend projection method, what does it involve? Right? What does it involve? How we can use the trend projection method? So it involves two things. Number one, determining the trend of consumption by analyzing the past consumption statistics. By analyzing the trend of consumption, or determining the trend of consumption by analyzing the past consumption statistics. You are going to manufacture tea, you are going to manufacture coffee, you are going to manufacture washing powder, you are going to manufacture a color TV, you are going to manufacture a bicycle, you are going to manufacture a refrigerator, you want to manufacture a drone. We can understand that in that particular category, in terms of the price, in terms of the quality, or in terms of the after sales service or the distribution process, what has been the demand in the past, if the product is already there in the market. If it is not there in the market, then not in India, but maybe it may be a new product or service for India, but may be already existing in the other countries. So you have to have the data from those countries, and different sources are there. You can go to different published methods. Bloomberg is there, then say Thomson Reuters publications are there, or number of databases are there. Sometimes they are premium, sometimes the data is available. So you can understand that how the things are behaving, or that product or service is behaving in the other countries. You have the data because you want to set up a trend, you want to build a trend, and you want to understand how that trend would be in the years to come. So if it is already in India, you have the data easily available. If it is somewhere else, you have to get the data, and you have to project a trend, you have to plot it on the paper, and try to understand the behavior of that line. Is going up, remaining straight, or maybe as a horizontal, or is going down. So we have to understand that. And second thing is projecting future consumption by extrapolating the trend. How it has behaved in the past 5 years. In the stock market, we use it very commonly. Trend projection method is very common in the stock market, that when you want to choose a stock for investment as an investor, you see that what was the return or what was the behavior of that stock in the market for the past 5 years or the past 10 years. So we try to see, and then we see that okay, the trend is going like this. But nobody knows that when we make investment, immediately there will be fall. So that's the stock market. It is different. That doesn't happen in the real manufacturing world or in the service generating industry. In the service industry, that can be totally different. But we have to have sufficient amount of the previous data, and on the basis of that data, we will have to, first of all, two steps. Means first of all, you have to have the past data, right? Past statistics, depending upon the number of years, and our resources for how many years we can go back in the past. Longer the duration, better it is to forecast the demand for the future. And once we have that previous data with us, past data with us, then we can project the demand, or maybe go for the projection, forecasting of the demand by extrapolating the trend for the future, right? So, next thing is when trend projection method is used, be careful here. When trend projection method is used, the most commonly employed relationship is the linear relationship. The most commonly employed relationship is the linear relationship. And what is a linear relationship? With the help of this model, you can understand the linear relationship. Yt is equal to A plus Bt. What is Yt? Where Yt demand for the year in the demand for the year t, any year you can call it as, hypothetically there is year t. T is the time variable, capital T is the time variable, A is the intercept of the relationship and B is the slope of the relationship, intercept and the slope of the relationship. And to estimate the parameters like A and B of the linear relationship, the least square method is used. The least square method is used, right. So, trend projection method, least square method is a very common, very common method, and you can refer to any book on the statistics or maybe on the project management. Prasanna Chandra's book is very good in this. He has very nicely explained what is the trend projection method, how we can use in the market and demand analysis or for the forecasting of the demand for the projects or a new venture. So, we can use this method. So, we should have the linear relationship number 1, and least square method is a very commonly used method. This is the formula we use, this is a model we can use, and if you want to see the detailed explanation how we can use this for the demand forecasting, you can refer to the books on the projects or maybe on the statistics on the research or on the research methods, and you can understand it very clearly that how this method is used. But in nutshell, you can understand predicting about the future demand on the basis of the past trend of the consumption of that particular product or the service. Apart from the linear relationship, you can develop the exponential relationship also, you can develop the polynomial relationship also, you can develop the Cobb-Douglas relationship also. Different kind of the relationships can be developed, but most commonly used relationship for forecasting the demand is the linear relationship, which is very simple to understand, very simple to work out, and on the basis of that we can easily forecast the demand for any product or any service on the basis of the previous year's data. So, if you want to have the correct estimates for the future, means in the process of the extrapolation of the demand for the future, you should have the longer range of the data for the previous periods. Next method is the exponential smoothing method. This method is basically a correction over the trend projection method, right. Trend projection method, and this is the exponential smoothing method. As the name indicates, it smooths something. It smooths something means it smooths the errors in the demand forecasting which were there maybe by using the trend projection method or any other method. Maybe we forecasted by using any quantitative or qualitative methods, we forecasted that in the year to come there will be demand for a product of for the 100 units, right. Our estimates were based upon we use the trend projection method or any other method, and we estimated that we are going to, entire market is going to sell 100 units of this product in the year to come, that is in the year 2026, right. But actually the demand was 200 units. So, it means there is a say deviation of the 100%, 100 we estimated 100 and the demand was 200 units. So, there is a error, serious error, or there was a demand for only 80 units. So, there was again an error that we estimated, we forecasted that total market is going to demand or total industry is going to sell 100 units of this product in the time to come, but they sold 80 units or they sold 200 units. Demand was 80 units or 200 units. So, with the help of this exponential smoothing method, we can correct those kind of the errors in the demand forecasting. So, you see it very carefully. In exponential smoothing, forecasts are modified. Forecasts are modified in the light of the observed errors. In the light of the observed error, forecasts are modified in the light of the observed errors. If the forecasted value for the year t, that is called as Ft, is less than the actual value, that is for the year t again, and that is St, the forecast for the year t plus 1, that is Ft plus 1, is said to be higher for the higher than the Ft forecast for the year t, and if Ft is greater than St, it means the forecast was more than the actual sales in the market, then the coming years will make correction and the new estimates will be set lower as compared to the previous estimates. So, we will have to check it, what was the forecasted demand, what was the real demand, and what is the difference. If the forecasted demand was less, real demand was more, so it means under this method, exponential smoothing method, when we will forecast the new demand, we will keep it on the higher side, right. But if it was reverse, that the forecasted demand was more, actual demand was less, so for forecasting the demand for the next period, we will lower down the forecasted demand, right. So, in this case, we will use this model. Exponential smoothing method is, we will use this model, and this model is ft plus 1 is equal to ft plus alpha et. So, what is the explanation of this model? Explanation of this model is that where ft1 is the forecast for of the demand for the year t plus 1 means for the subsequent period, because previous estimate was incorrect. So, we are going to forecast it for the maybe next period. So, it means we have to be very correct, we have to learn from the past this mistakes. Alpha is basically the smoothing parameter which ranges or which lies between 0 and 1, and Et is the error in forecasting for the year t, that is St minus Ft, actual sales and forecasted sales. So, if actual sales were less than the forecasted sales, you will make that corrections here, right. And if the actual sales were more than the forecasted sales, you will again make the correction here. So, it means we will use this model, and with the help of this model, we will forecast the sales for the time to come, so that any kind of the mistakes which are committed in the past, those mistakes can be done away, and whatever the forecast we are going to do for the subsequent period, that is going to be nearer to the correct estimates. So, this is the exponential smoothing method. And next method is the moving average method, right. Next method is the moving average method. So, in this moving average method, it's very simple maybe, and again it's a kind of a trend projection, and we use the extrapolation method in the moving average as well. So, what this method is and how this method is going to behave, or we are going to use it. So, please see it as per the moving average method of sales forecasting. The forecast for the next period is equal to the average of the sales for the several preceding periods. We take the average. In the trend projection method, we develop a trend, right, and we try to see how the trend line behaves, going up, remaining state, or maybe coming down. But in this case, we will calculate the average of the past many periods, several preceding periods. We will take the average of that, and then we will be forecasting the demand for the coming years. For example, we take the average of the past 5 years of the actual demand. So, when we are going to take for the 6th year, right. So, we will take the past 5 years. When we will going to say predict the demand for the 7th year, then the immediate past 5 years, so 1 year will be left. So, immediate past 5 years average will be taken. That is called as the moving average method. Again, a very interesting, very simple to understand method, so that if any kind of the deviations are there, any kind of the ups and downs are there because of the one or the other reasons in the market in any year, that can be taken care of, that can be adjusted. When you are taking the average of 5 years or 7 years or 3 years, then many odds are already going to be taken care of, and whatever that forecast we are going to predict for the 6th year on the basis of the past 5 years, that is going to be reasonably correct estimates. So, we use this formula for this. Ft plus 1 means forecasting for the subsequent period. So, we will take the sales St plus St minus 1 plus this, and then St minus n plus 1, and whole is divided by n. So, it means where Ft plus 1 is the forecast for the next period we are going to, and St is the sales for the current period, that is the what sales are there in the current period, and n is the period over which the average is done, right. Over the period the average is done. If it is a 5 years average we are taking, so n is 5. If the 7 years average we are taking, it is 7. If 6 years average we are taking, it is 7. So, on the basis of that, on the basis of the past number of years, taking the average of the past 5, 6 or 7 years, when you take that average figure for the next immediate subsequent year and forecast the demand on the basis of that, that method is called as the moving average method. So, these are some methods which we call it as the quantitative methods, or maybe say the second set of the methods we talked about is, that was the time series projection methods. We call them as the quantitative methods also. So, till now we could discuss with regard to the demand forecasting, the two methods, qualitative methods and time series projections methods. And now in the next class, we will be talking about the third set of the methods, which are called as the causal methods. So in detail, we will talk about all these 5 methods: chain ratio, consumption level method, end use method, lead indicator method and econometric method in detail in the next class. That is all about the discussion we will have on the causal methods. So till now we could discuss the qualitative and time series projections methods, and with this discussion we will stop here for today in this class, and in the next class we will we'll discuss the causal methods of the demand forecasting. Till then, thank you very much.